Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve November 2023 University question paper under the subject Financial Accounting. Again, a very important video for all the TYBMS Sem 5 student. This is the part 2 of a video series based on solving November 2023 question paper. So let us see what are the various questions that we are going to take up in this particular video and how to solve them in the most simplest manner. Okay, the first question, that is question number 3. We'll read the question once. It's given that Manish Limited has authorized capital of 1 lakh equity share of 10 each. The company issued 60,000 shares at a premium of rupees 2. The entire issue was underwritten by Ajay and Vijay in the ratio 5:3:2. So that is nothing but the gross liability ratio that they are giving you. Application were received for 48,000 shares, out of which the marked application were as follows. Jay ka it is 24,000, Ajay 8550 and Vijay ka 12,450. Okay, and underwriters are entitled to get 5% commission on issue price, and you are required to find out the net liability of underwriters and pass the journal entries in the books of Manish. Okay, so these are the things that they have told us that to find. So, okay, chalo. First step, we need to first note down or find the net liability of underwriters. Okay, so first step will always be this is in the book of Manish Limited. Okay, so this is for Manish Limited. Okay, statement of net liabilities of underwriters. Options are the columns will be steps, particulars, basis, then three underwriting, that is Jay, Ajay and Vijay, and then the total. Okay, now this is very crucial part. Okay, it is given that the company wants to issue 60,000 shares. Step number 1 will always be gross liability. It is said that company wants to issue total 60,000 shares. So in total, I'm writing issued 60,000 shares in the ratio 5:3:2. Okay, so now on the calculator, we take on the calculator 60,000 shares into 5 divided by 10. So the first person ka shares we get it as 30,000. Gross liability is 5:3:2. So first amount is 30,000. Again on the calculator, we have 60,000 into 3 divided by 10, so which comes to 18,000. And 2 divided by 10, 60,000 into 2 divided by 10 will give you 12,000. That's the gross liability. Step 2. From gross liability, we'll always first less marked application. The marked application they have already given you in the question. The marked application values are already there: 24,000, 8550 and 12,450. So we'll note down that. This is given, okay? So 24,000, it is less 8,550 and 12,450. When you add up these all three values, 24,000, 8,550, 12,450, we get the value as 45,000. Remember, okay, so this is 20. So we will subtract it and we will get C balance. So 30 minus 24 is 6,000. 18 minus 8,550 is 9,450. 12,000 minus 12,450 is negative 450. And 60 minus 45 is 15,000. Okay. Once we have minus the marked application, now we'll have to minus the unmarked, less unmarked application. Now, how to calculate unmarked application? In the question they are given you, the company the application will receive for 48,000 shares. From 48,000, 45,000 is marked, so unmarked will become 3,000, the remaining. Again, this 3,000 has to be divided in the ratio 5:3:2. So on the calculator, 3,000 into 5 divided by 10, it comes to 1,500. 3,000 into 3 divided by 10 is 900. 3,000 into 2 divided by 10 is 600. Okay, when you minus, you get the balance. That is step number E. So 6,000 minus 1,500 is 4,500. 9,450 minus 900 is 8,550. 450 minus 450 minus 600 is minus 1,050. 15 minus 3 is 12,000. Okay, now the rule is, if there is any negative meaning they have issued more than what they were supposed to, so that's an adjust excess credit. Okay, this is an excess, so we can adjust this amount among the remaining two. So I'll write less adjust credit of Vijay. We are adjusting as credit in the ratio 5:3 from the remaining. So this will be 1,050. Here it will be 0. Okay. Now the 1,050 we have to divide in the ratio 5, and so it will be 1,050 into 5 divided by 8, which comes to 656.2. So we'll take it 656, and 1,050 into 3 divided by 8, we will get the value as 393 point. So we'll make it 94, because we have to be, total has to be 1,050. Okay, chalo, we will minus it. That will be net liability. So 4,500 minus 656 will give you 3,844. 8,550 minus 394 is 8,156, 0 or nil, and 12 minus 0 is 12,000. Okay, so that's our net liability. Okay, so this is how you all had to solve the problem based on finding the net liability of underwriters. Okay, so I want you to go through it once. Okay, now along with it, they are giving you, underwriters are entitled to get a commission of 5% on issue price. So we can find that value also. That is not a part of this but we can, just below that we can just write commission. Commission ka value is, they told you it is going to be on issue price. So 30,000 gross liability you have to go with, irrespective to how much they have issued or not. Okay, 30,000 into 12 rupees. It is given the share is of 10 rupees and at a premium of 2 rupees. So 30,000 into 12, okay, into 5%, it comes to 18,000. Same way for Ajay, it is 18,000 into 12 into 5%, so which comes to 10,800. And for Vijay, 12,000 on the calculator, 12,000 into 12 into 5%, which comes to 7,200 rupees. Okay, that's the commission. This is not a part of the net liability, it's a separate working. Okay, why we did this? In order to pass the journal entries. Okay, so now let us see how we start with the journal entry. 5 basic entries you have to pass. First step will always be, okay, now see how we go about in issuing these entries. Okay, the shares are of the company wants to issue 60,000 shares, but the application received were only of 48,000 shares. So on 48,000, face value was 10 rupees, 2 rupees was premium. So first entry will always be issue. So when you issue shares, money is coming in. So my entry will be bank account debit to equity share capital to security premium. Okay. Now how to get the value? What was the total number of shares that were issued? 45 and 45 and 3. We had, see, it's given that in the question, application were received for 48,000 shares only. So on 48,000 you're going to get money. 48,000 into 10, 4,80,000. Again 48,000 into 2 rupees, which comes to 96,000. So the total money that is received is 4,80,000 plus 96, that is 5,76,000. Okay, this is the amount, being equity amount on issue. Being equity shares issued at premium. Okay, that was my first journal entry. Now, second entry. Second entry will be based on whatever value are available. Okay, whatever is the net liabilities. Now, net liability of Jay is 3,844 shares. 3,844 shares, and the price of equity share is 10 rupees plus premium 2 rupees. So now let's see how you pass the entry. Okay, whenever there is liability, it will always be the name of the underwriters. So it will be Jay account debit, Jay account debit. See, Vijay doesn't have any liability, so his name won't come. To equity share capital to security premium. Okay, so now remember how to get these values. Jay ka 3844 was his liability into 12 rupees because share was of 12 rupees, and here it was 8156 into 12. So if you multiply 3844 into 12, you get the value as 46,128. Okay, next 8156 into 12, you get the value as 97,872. Now, in order to get the equity share capital and security premium ka value, add first the total number of shares which are pending. So it was 3844 plus 8156. So basically it was 12,000. So this will be 12,000 into 10, which is 1,20,000. And 12,000 into 2, premium is of 2 rupees. Okay, this is of 2, this is of 10 bucks. So 2 into 12 is 24,000. And it tallies by itself. Okay, this will be being shares issued to underwriters. Step 3. There is some amount of commission which is payable. We are going to pay them some commission. So underwriting commission account debit to, we are going to pay commission to all the 3 people. So it is to Jay, to Ajay, and to Vijay. Amounts are 18,000, 10,800 and 7,200. The total of which comes to 36,000. Okay, so being underwriting commission due. Underwriting commission due. Next, now last 2 steps are very simple. Now we only have to see from whom we have to collect money and whom we have to pay money. See, now Jay and Ajay, Jay we had to pay him, he has to pay us 46,000, we have to pay him 18,000. Ajay has to pay for 97, we have to pay 10. So eventually when you subtract it, Jay and Ajay has balance more. The due value is much more. So they are the people who will have to pay us the money. So our entry will be bank account debit to Jay to Ajay, because they have to pay us balance amount 46128 minus 18,000. Okay, which comes to 28,000. Sorry, 28,128. 97872 minus 10,800. The amount comes to 87,072. When you add up, the total value will be 115,200. Okay, it will be being net amount received from underwriters. And last fifth entry, who we have to pay money. Now see, Jay Ajay had to pay us, but Vijay, he didn't have any liability. In fact, we had to pay him commission. So we are now paying money. Money is going out. So my entry will be Vijay account debit to bank 7,200 being commission paid. Okay, so this is how you all had to solve this particular sum based on underwriting. So we had to prepare net liability and the journal entry. Chalo, you all can go through it once. Okay, now let us see the next sum. In the question, it is given that from the following is the trial balance of Vikas Limited. Prepare the balance sheet of the company as on 31st March 21. They given you the trial balance debit and credit. Debit mein they are giving you advances to employees, cash at bank, 8% government bond, premises, patent discount on issue of share, trade receivable, stock. And on the liability side, they are giving you, on the credit side, they are giving you equity share capital, reserves, loan from SBI, provision for tax, bills payable, short-term loan from bank, unpaid dividend, and profit and loss account. And they are asking us to prepare the balance sheet. So the balance sheet ka format I have already created for you all. Okay, it's given here Vikas Limited balance sheet as on 31st March 21. Roman number 1 equity and liability. Under that, number 1 shareholders fund. Under that, A share capital, B reserve and surplus. Then the second comes non-current liability. Under that, long-term borrowing, long-term provision. Then current liability. Under that, we have short-term borrowing, trade payable, other liability, and other short-term provision. And we get the total. That's the liability side. On the asset side, number 1 non-current asset. Under that, we have property, plant, equipment, which is tangible and intangible. B other non-current assets. Okay, and then we have two current asset, in which we have current investment, inventories, trade receivable, cash and cash equivalent, short-term loan and advances, and other current assets. Okay, so chalo, let us see now how we solve this sum. We'll go one by one. Now, very first thing, we need to find share capital. In the question, they have already given you share capital ka direct. The very first thing on the credit side, it is given that equity share capital 52 lakhs. There is no preference share, so you don't have to prepare any note. Directly we can write 52 lakhs under share capital. Okay, chalo, next is reserves and surplus. Now let us see what all things can come under reserve and surplus. You can check, there are two things. One, I can see there is capital reserves. Second, there is profit and loss account. So two things are there, so we'll have to prepare a note for it. So under notes to account, mein number 1 reserve and surplus mein we have capital reserve and profit and loss account 60,000 and 42,980. Total comes to 102,980. So under notes to account, note number 1, reserve and surplus ka value is 102,980. Okay. Second, non-current liability mein first thing is long-term borrowings. Now check what is long-term borrowing, anything given in the question. Now long-term borrowing mein we can see long-term mein basically debentures and loan, bank loan usually comes. Because I can see bank loan from SBI. There are no debentures, so we can directly write the value 8 lakhs. Okay, if I want, I can put here loan Okay, next is long-term provisions. So let us check if there are any long-term provision given in the question. Okay, provision for tax is given the question. A provision for tax does not come under long-term provision, but it comes under short-term provision. So I'll write it out directly here. 7,64,000. Okay, so there is no long-term provision in the question, nil. Under current liability, first is short-term borrowing. So is there any bank overdraft or any short-term loan? We can see there is directly given in the question short-term loan from bank 4,90,200. So 4,90,200. Trade payable may you have creditors and bills payable usually. Though let us see anything as of such is given. Now they have directly given you bills payable, so we don't have to prepare a note. We can directly write it here. There's under trade payable. There's no creditors. So 1,85,000, 120. Okay. Anything else which is missed off? We have to just go through it once. Okay, that is over. Now other liabilities. Now other liabilities may check what else can appear. What else is pending? See, equity capital we have done, capital reserve done, loan from SBI, provision for tax, bills payable, short-term loan and profit and loss all are done. There's only unpaid dividend. So unpaid dividend is nothing but the other current liability, 64,800. That's it. The total of which now after that we just have to find the total. So when on the calculator 52 lakh plus 1,02,980 plus 8 lakh plus 4 lakh 90,200, 185, 120, 64, 800 and 7 lakh 64,000. When we add up, we get the value as 76 lakhs 7,100. Okay, that's basically the liability side. Now similarly, we'll start with the asset part. Now under asset, non-current asset is the heading. Under non-current asset, we have property, plant, equipment. Under that, we have tangible assets. So let us see what all tangible things have been given. So now we'll have to look at the debit side. Okay, advance to employee, cash, government bond, premises is given 48 lakh 59,940, patent, discount, trade receipt, stock. So there's only one premises. So under tangible, directly we can write it as 48,059,940. Intangible mein there's only patent which we can see. We can directly write it as 10 lakhs. Okay, then other non-current asset may usually all your preliminary or share issue expenses usually comes there. So I can see that discount on issue of shares written off. So 25,000 that comes here. Okay, on the current asset we have current investment if there is any current investment. Okay, 8% government bond. Now they haven't mentioned whether it's a long-term investment or not. So we'll take it as current investment, which is 3,64,320. Okay. Next, we have inventory. Inventory is a stock in trade. Directly it is given to us as 3,55,600. Next is trade receivables, directly given 366,240. Okay. Next is cash and cash equivalent. They are giving you cash at bank 3,64,320. So we note it down. 3,64,320. Next is short-term loan and advances. Okay, it's given as 3 lakh advances to employees. Note it down. Okay, now we'll just check anything else which is missed out. Advances are done, cash is done, government bond, premises, patent, discount, trade receipt, stock. Everything is done. That's it. There's no other current assets. We total it up. So when you add up 48 lakh 59,940 plus 10 lakh 2 lakh plus 25,000 plus 364,320 plus 355,600 plus 366,240, 364,320 and 3 lakh, the total will come to 76 lakh 7,100. Okay, so this is how you all had to solve this particular sum based on creating the balance sheet. Okay, chalo, you all can go through it once. ठीक है चलो, I hope everyone have understood this, these two sums. Okay, chalo, with that we will be ending this video here. Thank you.